All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for December 8th, 2021. So yesterday we had the strong move that broke out of this consolidation zone and finished, within inches of the all-time high and the RL10 peak. Today there was a micro gap up, a little bit of a sell-off, and then a very strong close into the end of the day. We're poised for this big breakout move here that will test, the all-time high, and then postured to really do well if it gets above that. So right now, to me, there's this barrier at the all-time high, or at the peak of the RL10, I should say, and the PSAR flip. So it's got to prove that that's going to work. So I would treat this again as a critical state to our battle drill at the top of a nice recovery, and we got to be ready for it to break to the upside or back down here to the Bollinger Band mean. Both of those, I think, are equally likely. So I will be a tactical trader until we get below the Bollinger Band mean once more. I would take that as a rejection of this upward move, and then I would take that as a sign it's coming back to Z -1 and then Z -2. Right. And then I would take this as a tactical trade up until the test of the all-time high. And if it breaks through there, then I'm looking at, second positions and a significant upward move potential. The PSAR has continued its slope downward. The RL10 is still in the winter. It's crossed the baby dragon halfway through the dragon, but still in the winter. Price has cleared the PSAR dots by 2 days. This is the argument for why the PSAR price moving through the PSAR can get you into a swing trade that you want before the RL10 confirms. I think it's reasonable to place, to get in half a position there. That's not crazy. Where I am right now on the stop would be a 2-bar low. Part of me says I want, actually the Bollinger Band mean is what I meant to say. This would be the 2-bar low. That's too far. I also think if you took this PSAR entry right here, like if you took that, then to me, as you're coming into this critical state, you've got to raise your stop now, I think to the 1-bar low is what I would say. So if you've got this move locked in right now, I want to keep half of that. And that's why I would move my stop to here. 1-bar low. All right. Let's look at sectors. So we have the S&P at 0.26. Emerging markets were a little better at 0.4. Q's at 0.45. The Russell was the best today at 0.68. Slightly underperforming was the Dow at 0.07. Treasuries were the worst at -1.73 and have now dipped under 150. So they are not holding the line. Let's look at sectors that outperformed. So we have the Bitcoin futures 0.37, materials 0.42, tech, Bitcoin, the FANGs, and wheat and precious up to 0.63. Mexico 0.74. Simon Property Group up 0.77. Blended commodities, biotechs, clean energy, oil up to 1.61. Now you're getting some nice work in there from the energies. Moonshots 1.64. Brazil, Arc Genomics 2%. Lithium, Arc Innovation, Ethereum 3%. Blended large cap Bitcoin, or blended large cap crypto, I should say, 3.5. And then marijuana 5.76. The individual company target outperformers, Robinhood 4%, Virgin Galactic 4%, Alcoa and PayPal in the disruptor space 3.3. Squarespace disruptor, Apple conservative tech 2.28. Tesla, second day, a nice recovery at 1.64. Look for some more of that tomorrow. Cliff 0.9 to round out our outperformers. Underperformers, not so many. Consumer discretionary 0.25. Oil exploration 0.19. The two lumbers 0.15, 0.11. Blockchain 1.1. Agriculture 0.05. Now we're getting into negative territory with energy at 0.02. Staples minus 0.32. Finance the worst at minus 0.53. And then the VIX off 6%. So this feels more like a tech kind of up move. Tech and disruptors, and is the way it's looking to me. Let's look at the traders. A note for Peter. The best way to ask me where I would put my stop is to be paper trading forward the swing trade on the markets with your own trading plan and your stop with your justification, and then compare mine to yours and see what you get. That will help you develop the coach's eye and will be a way to jumpstart your deeper understanding. That's best practices. All right, Chi Wang Chong offers us this insight. So in 3 sections, the top section is a view of the S&P 500 and the slope of the just a second. Pen came out. Let's try that again. Yeah, there we go. So the slope of the RL30, which you can see is this. That's this black line here, right? And which you can see is rolling over. So negative slope. Now, what he's got here in the middle what he's got here in the middle section are the RL30 slope z-scores of the 6 indexes. And so the worst right now is IWM. That's this black one that's sloping down, and it is at -2. The Dow had been underperforming, but is now starting to roll up. Treasuries have been the best. The Qs and the S&P are declining. Emerging markets are about flat. Now, inside the S&P, what we've got is tech is the best, then materials, then energy, and then finance. Now, what's interesting is to note that finance and energy have started to make their turn. All right. So you have energy has touched and is starting to recover, and finance has already started to recover as well. And I want you to notice how long those ocean waves look like. So this is finance has been now in a period of underperformance and is now getting ready to roll back up in the same way that energy had been in the ascendancy, then it decayed and rolled. Now notice that tech was underperforming while energy and finance were arising. And then once they had had their run right about here, you notice that tech has now resumed the lead. And now, as a result of the market sell-off, they were all going down, but now the leadership is sneakily rolling into energy and finance. So this is an interesting way to use the slope statistic, the z-score of the slope statistic, to look at relative performance of the indices over time. An advanced technique, but very, very clever. You cannot hide those kinds of moves for sector rotation when you use that approach. All right, here's one in Ethereum. Let's see, who was this? Is this John M? Yeah. All right. A couple things I'm going to notice, John. I'm not sure what value the volume on the bottom is giving you. It just adds more information that is distracting to you, maybe. I don't know. But maybe you're using it for a reason. Notice how the alternating red and green bars are distracting to their location inside of the river and the RLCO. That's one of the reasons I use thin black lines, so that the price goes behind the regression lines. For me, I need to see the regression lines. Like, it's hard for me to see that 10-period regression line in here because the bright flashing red and green bars I find distracting. So that's why I minimize those by thin black lines. All right, so here's the start of the day. So there's an immediate kind of sell-off and a roll up. This is tradable. It held support here, here, and here. So now this crossing of the Bollinger Band mean is tradable, and you'll get this trade. This is a nice short and a good way to get paid. It came down and hit the, I'm not sure what a mid-channel resistance is. I don't know what that one is. it did not get to the Z1 and started to reverse. So that's a good exit in order to get paid. Now, this is where I want you to stop and reverse right here, because you're crossing the VWAP after it rejects the sell-off. It rejected the sell-off without leaving the river, and that's a higher low than these lows. So that actually gives you a COTA 2 that makes this a nice COTA 2 entry. Now, let me clean that off so you can see it. So when you have this this belly of the dragon, or even if you go with the RL10s, the rising RL10s, this rising lows, and notice the rising PSAR also. When this doesn't fail further, that's a good way to capture this trade. But now as it crosses the VWAP and the RL270, you can now enter right here. And that becomes a COTA 2 entry right here. And now by the time you exited over here, instead of losing 0.7, or 0.5, I should say, with an entry, where did we say that was? Oh, I moved that just a minute. When you adjust the screen, the drawings don't go with it. So now if my entry is here for the COTA 2, now throughout the length of this trade, you're going to get paid anywhere inside here. And now if your stop is here, like it should be at the PSAR, that makes this, by the time you're entering, which is a Z3 breakout, you're already 1R in hand. And then anywhere inside of these 10 bars, you're going to get a positive trade better than this exit. This is a good stop and reverse because you're betting it getting through the VWAP and coming down to test. It fails to fail. I think I'd be scratching like right here. When that doesn't happen and it stops and reverses, this time it didn't even get to the Z-1 either. I think I'd be scratching that trade because I'm right in the middle of the channel and it's holding at the VWAP, which is what you would expect. And then you can take this as a stop and reverse and you'll get paid inside here, or at worst, take the exit you took, which is something like a scratch instead of a minus 0.9. Now, if you scratch here, then this becomes the great short trade that you already got. It reversed and you cashed. Well done, because it went outside the Z3, came back, cashed 0.8. Well done. I also think you could have considered a 1, 2, 3 entry right here, or an entry here where it crosses the VWAP. Now you see with all the bright thick colors, how it's hard to follow the price action. So I'm thinking you want to make the colors of the dragon a little paler. And that's why I normally opt for the color code on the RL10, so I can see the price, what season the price is in. I find that easier to see. But I also appreciate why having the dragon multicolored as possible. So I think the 1, 2, 3 entry here gets you paid. Again, if you're being consistent with how you were entering on the short side before, when it crosses the VWAP here is where, for consistency, you want to get short. And then this pays off really nicely. This is a nice COTA 2 because you have a low, a higher low. The dragon is in the spring. You're above the PSAR. That's the one you got to nail. And then if this got you out, then this should get you back in here instead of here. And then that's a good exit. So you were positive for the day. So you're getting paid to learn. But my spider sense is that this should probably be around 3R. So why don't you retry? I would retry that bar by bar and see what you come up with. Maybe play around with some of those different color combinations in order to more clearly see the RL10, which is the actual price signal that we care about. There's a lot of camouflage going on in here. Here's Luke with the the Russell. All right, so we have the opening, holds, moves across the Bollinger Band mean, gets his entry with a wrist box to the bottom of the, I guess, the RL30. And you know what I'm going to say here. This moved all the way to Z3, and at least we didn't lose money on that one, but we got to do better here. Having said that, here's the bottom of the dragon. Here's a higher low in the dragon. And there's a night. So I think your Kata 2 could be in here. Still, this is all right. This one, let's scratch that one instead of micro loss. You have another higher low here. This is getting better on the Kata 2, but we could actually be in here. Nice, good reverse. Didn't follow through. It didn't follow through. This is another good effort. Staying with it, you get paid. Nice. This one, there wasn't much there. So I think you got just about what was available with this one exception over here with that one that got away. Still 2.7. Good day at work. Here's Cliff. Going to get paid nicely here. For 5.4. This is a good effort to the downside because the dragon is rolling over, and this is essentially a collapsing dragon. And again, comes all the way down to Z3. This is about the 1, 2, 3, and that's halfway back up the stack. So you didn't take a loss. That's okay. This is more like entering inside the bend of the dragon. You know, that's the elbow of the dragon. So that's pretty good. 1, 2, 3, 4. That's kind of I think that's a late exit. I'm happy with this exit here. Has a nice peak and then comes back through the dragon. That's okay. This is probably 2 bars late. We'd like to be here instead of here. That's a good effort. And then the Uwei exit for 1.1. So there's 0.2, 1.1, oops, 1.1, another 1.1. Here's a nice 4. You got what was available. What a nice move. The dragon can't make any new highs. The RL90 is rolling over. Here's a Z3 pinch, breaks through the dragon, through the Bollinger Band main. Great short. Yeah, you know, when this starts to roll over, that's a pretty good second position. This one's really good too on the, you know, you're getting short as it crosses the RL270. You're still front running the VWAP. So that's a good early second entry. I like that one. 1, 2, 3 to lock in 4. That's more like it. And then this is a great re-entry. on one for scratch, fractional, and probably and then another micro gain. So that's pretty good. 5.4 plus 2.7. Plus 2.7 gives us about 8.1 for the day between Cliff and IWM. Pretty good work. This is our Wabi Sabi Bowl. So Wabi Sabi is the beauty of imperfection, the subtle beauty. And this comments a lot on the human condition. As a trader, I think that's a pretty good, healthy aesthetic to manifest. It's an acknowledgement that the world is beyond our control, but not beyond our appreciation, that we can coexist with it and we can do well and hold water even if we're not perfect. We just got to be internally whole and consistent. And the perfection is in the imperfection, but the unity under a single theme. Wabi Sabi, WABI SABI, Wabi Sabi. Good stuff. Still bullish volatile. Now overbought across the board. New strength back in the market, as you can see. Emerging markets, Latin America and Asia less Japan, are all showing signs that if they got weak, those would be the candidates to short. It's bottoming out here, getting ready for a critical state move to the upside or a further extension to the downside. So we'll see what that is. Still showing risk off. The red bullish has become yellow bullish on the basis of that little recovery of the last 3 days. Johnson & Johnson, Procter, Disney showing the strength. Plenty of dojis today in the Dow. A few auto framers testing out with the Dow, Merck, Travelers. But some warnings. All of these that are overreaction shorts are ones that had been lagging the Dow, have had nice recoveries, and would be the first ones to stock if the market began to show weakness. So if the market began to roll over and these started showing weakness, you could be short those. Handful of dojis in the ETFs. Still a goodly number of auto framers to work with. Auto framers. Here's all the ones that are better than 2 to 1. I like Walmart and oil. I think I like the Russell and the discretionaries too. The S&P is in kind of a pinched condition. Today was really the first narrow range day that we've had in the last 10. If we go back and look at the market health check, we've had really large days in a row. That's why we're in bullish volatile. But today was actually kind of a pinch squeeze day. So that little compression is an alert to a potential change of state. It's like the train slowing down coming into the station now that it's approaching the previous level of resistance. That's why I think that's a critical state, and we got to be ready to go either direction. Still lots in the winter on both sides of the aisle here. PayPal and the other disruptors starting to make their little short-term positive move after lagging for a while. That's a nice, convenient turnaround. Same with Latin America and Brazil. They're starting to show some like a regional cycling effect. The slope stat, now that it's basically flat, this would be a logical place for this to start to make the move back up across the normal zone in the yellow. But again, you worry about this resistance level, putting a lid on the market here, and then you worry about that kind of a move again to the downside as it rolls out of that. All right, that's everything we got. We'll get this published and posted, and we'll be ready for tomorrow.